Hello friends, you are welcome in my YouTube channel. Today we will discuss about GSTR 2 return filing, how to file GSTR 2, and we will discuss now GSTR 2 return filing format, eligibility and rules. GSTR 2 is a monthly return that summarizes the detail of inward purchases of taxable goods and services. And now question is arises, what is GSTR 2? Every registered taxable person is required to give details of inward supply, that is purchases for a tax period in GSTR 2. Why is GSTR 2 important? GSTR2 contains details of all the purchases transactions of a registered dealer for a month. It will also include purchases on which reverse charge applies. The GSTR2 files by registered dealer is used by the government to check with the sellers. GSTR1 for buyer and seller reconciliations. Now, what is buyer seller reconciliation? Buyer-seller reconciliation or invoice matching or is a process of matching taxable sales by the seller with the taxable purchases of the buyer. It is a vital because ITC stand for input tax credit, okay, on purchases will only be available if the details of purchases filed in GSTR2 return of buyer matches with the details of sales filed in GSTR1 of the seller. For example, Ajay buys 100 pen worth rupees 500 from Vijay Stationery. Vijay Stationery must show rupees 500 sales in GSTR1. Ajay must show the same rupees 500 purchases in GSTR2 to claim ITC. Unless the amounts match, Ajay will not be able to claim ITC. Most of the headings under GSTR2 are auto-populated from counterparty GSTR return, so it will involve minimal time. Now, what is GSTR to due? What is GSTR to due? As per the Act, due date for filing GSTR 2 is 15th of next month. There is a 5-day gap between GSTR 1 and GSTR 2 filing to correct any errors and discrepancies for businesses with turnover less than 1.5 crores. Quarterly returns are applicable whose due dates will be announced later. Now, Now, what happens if GSTR2 is not filed? If GSTR2 return is not filed, then the next return GSTR3 cannot be filed. Hence, late filing of GSTR return will have a cascading effect leading to heavy fines and penalty. What happens if GSTR2 is filed late? If you delay in filing, you will be liable to pay interest and late fee. Interest is 18% per annum. It has to be calculated by the taxpayer on the amount of outstanding taxes to be paid. The time period will be from the next day of filing, 16th of month to be the date of payment. The late fees is rupees 100 per day, 100 per act, so it is under CGST, rupees 100 under SGST. Total will be 200 per day. The maximum amount is rupees 5,000. There is no late fees for on IGST. Now, who should file GST2? Every registered person is required to file GST2 irrespective of whether there are many transactions during the month or not. However, these registered persons do not have to file GST2. Input service distributor, composition dealers, and non-resident taxable person liable to collect tax, and person liable to deduct TDS. Supplier of online information and database access or retrieval services who have to pay tax themselves. Now, how to revise GSTR2? GST2 once filed cannot be revised. Any mistake made in the return can be revised in the next month's return. It means that if a mistake is made in September GST2, rectification for the same can be made in October's GST2. What is GSTR 2A? When a seller files his GSTR 1, the information is captured in GSTR 2A. GSTR 2A is a purchase related tax return that is automatically generated for each businesses by the GST portal. It takes information from the seller's GSTR 1. You are required to verify and amend this return before filing on GSTR portal. Details to be provided in GSTR 2. There are 30 headings and there are 13 headings in GSTR 2 format prescribed by the government. We have explained each heading along with the details required to be reported under GSTR 2. GSTIN. GSTIN, it is a number. Each taxpayer will allotted a state-wise PAN-based 15-digit goods and services taxpayer identification. A format of proposed GSTN has been shown in the image below. GSTN of the taxpayer will be auto-populated at the time of return filing. You can see this format GSTN, and first two digit is a state code, and then PAN number, your PAN number, and then entity of the same PAN holder in the state, and Z alphabet is it by default, and last one digit is a check sum of digit. This is the format of GSTN number. And now name of the taxpayer, you can say the name of the taxpayer including legal and trade name will be auto populated. Month year mentioned in the relevant month and year for which GST2 is filed. Inward supplies from registered taxable person. Most of the purchases from a registered person will be auto-populated and here from the GSTR1 filed by the seller. It will have all details of type, rate and month and amount of GST, whether ITC is eligible amount of ITC. However, it will not contain purchases under reverse charge. You can see this format: inward supply received from a registered person other than suppliers attracting reverse charge. In first column is GSTN GSTN of supplier, then invoice, rate, taxable value, then amount of tax, in integrated tax, central tax, and state or duty tax and cess. Now next column is the place of supply, place of, then whether input or input service capital of goods, then amount of ITC available, integrated tax, central tax and CA. This is the format of inward supplies received from a registered person other than supplies attracting a reverse charge. Now, certain transactions may not be auto-populated because seller did not file GSTR1. Seller files GSTR1 but missed the transaction. In other case, the buyer can manually edit this transaction. The seller will get a notification to accept this addition or modification in GSTR1A return. If the supply is received is more than one lot, the invoice must be reported in the return of month in which the last lot is received and recorded in the books of accounts. Inward suppliers on which tax is to be paid on reverse charge. Certain goods and services attract reverse charge, that is buyer is liable to pay GST. A registered dealer purchasing more than 5,000 per day from an unregistered dealer is liable to pay reverse charge. All purchases on which reverse charge applies will be reported in this part. 4A. Under this head, all purchases on which a reverse charge specifically applies by law must be mentioned. For example, purchasing cashew nuts from an agriculturist, and for this head will list the purchases from the unregistered dealer which exceeded rupees 5,000 per day from an unregistered dealer. Under this head, reverse charge GST paid on import of service will be reported. Inward supplies on which tax is to be paid on reverse charges. GST and the suppliers invoice. This is the format we have discussed earlier. Here you can see this is the format. Inward supply receipt from registered supplier, inward supplies receipt from unregistered supplier, and import of services. Now, inputs or capital goods received from overseas or from sales unit on a bill of entry. Any kind of import of inputs items used to manufacture finished goods or capital goods received against a bill of entry must be reported under this head. Goods received from SEZ Special Economic Zone are also reported here. 5A imports. Any kind of import of inputs item used to manufacture finished goods or capital goods received against a bill of entry will be reported here. Details of bills entry along with 6-digit port codes and 7-digit bill number must be mentioned. And received from SEZ. Inputs or capital goods received from sellers in a SEZ will be reported here. You can see this format input or capital goods received from overseas or from a SEZ units bill of entry. And the GST and supplier, details of bill of entry, taxable value, rate, amount, integrated tax, and we have discussed this type of format earlier. And 5A is imports and 5B column 5B row is received from SEZ. Okay, this is the format you can analyze and you can see this. Now, amendments to digital details of inward supplies furnished in return for earlier tax periods in taxable and tables 3 and 5, including debit notes, credit notes issued and their subsequent amendments. A taxpayer cannot revise any GST return once it is filed. Revision is possible only in the next month's return. Under this heading, the taxpayer can amend any details of purchases of goods or services in earlier months. This information can be filed manually. Subsequently, the seller will also get notification regarding this modification. The seller needs to accept this charge in GSTR 1A return. This head will contain all revision of inputs, goods or services except imports. And 6B. Any change in amount tax calculated on imported goods or and goods from SEZ can be made under this heading. Here the taxpayer must mention the charge made in the bill of entry report. The taxpayer must report all debit and credit notes issued with the respect to purchases. Any debit or credit note issued under the reverse charge mechanism will get auto-populated here from counterparty GSTR 1 and other application returns applicable returns just like GSTR 5 filed by NIR and are non-resident, and any changes in debit or credit note of previous month will be reported under this heading. You can see this format. This is the 6A, 6B and 6C. Debit note or credit note original, debit note, credit notes amended by the supplies of other than import of goods received from such information furnished in table 3. This is the format you can see. Now we will discuss about supplies received from composition taxable person and other exempt or nil rated non-GST supply receipt. This head will include purchases from composition dealer and other exempt or non-GST suppliers. Non-GST suppliers include items like petrol, diesel, which are not covered under GST. Also, both interstate and intrastate supplies need to be reported here. This is the format. Supplies received from composition taxable person and other exempt nil GST suppliers. Description: have an interested supplies. GST composition taxable person, exempt supply, nil rated supply, non-GST supplies, value of supply received from. This is the format. You can see that ISD credit received. Details of the input tax credit received from a registered input tax services distributor. usually a head of office which has transferred its ITC to its all branches. Mm, this data will be auto-populated from GSTR 6 filed by ISD. ISD credit received GSTN of ISD. ISD document details ISD credit received amount of eligible for ITC and it is ISD invoice and it is ISD credit note. Now TDS and TCS credit received. TDS credit received. This section will only be applicable in case you engage in specified contracts with a specified person, usually government bodies. The receiver government will deduct a certain percentage of transaction value on tax deduction at a source. All information will get auto-populated here from GSTR 7 filed by the deductor. TCS. TCS credit received. This heading is applicable for only seller registered with the e-commerce operator. E-commerce operator is required to collect the tax at source at the time of making payment to such sellers. This information will again be auto-populated from GSTR 8 of e-commerce operators. TDS and TCS credit receipt. This is the format you can see there. 9A is it for TDS, 9B for TCS. Integrated tax, central tax, and state tax or unit tax. And now consolidated statements of advance paid or advance adjusted on account of received supply. Any advance payment made during the month will appear here. If you paid advance tax on goods or services received during the earlier tax paid period but only received the invoices this month, declare these details. Advance receipts issued under reverse charge are also covered here. Normally the seller issues an advance receipt when he receives an advance payment. In case of purchases of attracting reverse charge, the buyer must issue the advance receipt if the pays in advance. Part 1. This this part will cover advance amount of paid for reverse charge applicable in the current month. It will also include the advance paid in the earlier month against which invoices have been received in a current month. The purchases will be broken up into interstate and intrastate. Part 2 will contain changes to above Part 1 in relation to the earlier month. This is a format consolidated statement of advances paid or advance adjusted on the account of receipt of supply. Information of the current month, inter- interest supplies, advance amount on which tax was paid earlier period but invoices has been received in the current period. 10 B is intrastate supply rate wise. 10 B is B2 is intrastate supplies rate wise. Amendments of the information furnished in table number 10 in earlier month. This is the format you can see and you can search on Google also. Now, input tax credit reversal or reclaim. ITC can be availed only on goods and services for business purposes. If they are used for non-business purposes or making exempt supplies, ITC cannot be claimed. In the heading, the taxpayer must to fill in details of ITC that cannot be claimed during the month due to various ITC rules. The head will cover all input tax reversal for the current month. It will also include ITC reversal on account of exempt and personal supplies. Amount in terms of rule. ITC will be reversed for invoices which were not paid within 180 days of issue. Amount in terms of rules. Rule 39. This is the ISD. If a credit note was issued by the seller to HO and the ITC subsequently reduced, will be reversed. Amount in terms of Rule 42. This is for the businesses which use inputs for both business and non-businesses purpose. ITC used in the portion of input goods or services used for personal purpose must be reversed proportionally. Amount in terms of Rule 43. This is similar to above exam that it concerns capital of goods. Amount in terms of Rules 42. This is calculated after annual returns is furnished. If total ITC on inputs of exempted non-business purposes is more than ITC actually reversed during the year, then the difference amount will be added to the output liability. Interest will be applicable. Amount in terms of Rule 42 to B. This is the opposite of the above. If total ITC on inputs of exempted non-business purposes is less than the ITC actually reversed during the year, then difference amount can be reclaimed as ITC. The taxpayer can manually amend any details of ITC under 11A of the earlier month. He will select the appropriate information from the drop-down menu. In this is the format of input tax credit reversal or reclaim. You can see this format, and this is the A part is information of the current tax period, and B part is amendment of information furnished in table number 11, number of in earlier return. Amendment in respect of information furnished in month, and specify the information we wish to amend. We have to select from the drop down menu. Down addition and reduction of amount of output tax for mismatch and other reasons. This section will capture any additional tax liability that can arise due to the corrections made to the GSTR 3 of the previous month. ITC claimed on mismatched duplication or invoices debit notes. In case mismatch of invoices, there may be double claiming on ITC. The excess ITC claimed from the duplicate purchase of invoices will be reversed and added to the tax liability. Tax liability on mismatched credit notes. Incorrect credit note issued by the taxpayer will also the result in incorrect ITC. Extra ITC claim due to the mismatch will now be added to your tax liability. Reclaim on amount of rectification or mismatched invoice, debit note or credit notes. Debit notes. This is the opposite of a point. In case the mismatch has led to claiming lower ITC, you are entitled to more ITC, and so the additional amount will be reduced from the output tax liability. Reclaim on amount of reconciliation of mismatched credit note. This is opposite, that is lower ITC has been claimed and will work the same way. Negative tax liability from the previous tax periods. This is due to the excess tax paid during the previous month will be reduced from output tax liability of this month. Tax paid on advance earlier tax period and adjusted with the tax on supplies made in the current tax period reduced. This refers to tax paid along with advance payments in earlier months for supplies received during this month. This is the format of addition and reduction amount, output or mismatch and other reasons. You can see these in columns and rows. ITC claimed on mismatch, duplication, invoice, tax liability on mismatch, credit notes, reclaim on amount rectification, mismatched invoice or debits, reclaim on account rectification, negative tax liability from previous tax period, tax paid on advance in earlier periods and adjusted with the tax supplies made in current tax period. HSN is a summary of inward supply. This section requires a registered dealer to provide HSN will summary of goods purchased. It will be entered by the taxpayer. HSN summary of inward supplies. This is the HSN description of option if HSN is furnished. You can, you can see total quantity, total value, total taxable value and amount. This is the format of HSN summary of inward supplies. Finally, sign off with a declaration that all information has been supplied and is correct. And this is the verification part. I have believed only a form that declare the information given and in above is true and correct to the best of my knowledge. Then you have to send and name of the authorized signatory, date and place. Then finally your return will be filed, and it will be declared. And this is the total, and this is the process of how to file GSTR 2. Now Please like and subscribe my YouTube channel for more videos about taxation, GST, TDS. We will discuss discussion in next videos about the GSTR 3 and how to file GSTR 3 under GST. Thank you. Please subscribe my channel. Thank you. Welcome.